You should not give up on government bonds. I know that if we go and talk to people and say, I'm going to put a good measure of your portfolio into government bonds, they say, what, at 2%? What's 2%? Well, it's better than -5. Yeah? We've got to put our money somewhere. Do you want it on deposit at a negative interest rate in Europe? Yeah. These interest rates that you're seeing in government bond markets are still, at this point in time, maybe 20 or 30 years from now, less secure because there's so much of it. But at this point, these are the building blocks of securing your wealth in a time when inflation is low. In fact, in London last week, I got asked, well, Gary, I need 7%. I said, but when did you get 7% last on a long-term basis in a secure way? And you go back, it's when inflation was 5 or 6. So if you're getting 2 and inflation is -1 as it is in Japan, you're getting a 3% real return, which means your spending power is going up, not down. And we're here to maintain and grow your spending power, not give you crazy numbers and taking inappropriate risk. In terms of currencies, I suppose Singapore dollars tend to be somewhere around about the dollar. I think the anchor of the dollar is still going to be helpful over the course of the next 12 months. But I think there's a particular opportunity in sterling. So let me explain that. Firstly, this is a chart of what's called the US trade weighted. So on the basis of the way in which the US trades with the rest of the world, put that together in a basket of currencies, and this shows you how the US dollar is doing against that basket of currencies. So we've seen this appreciation from an index level of 70 to above 90, a very significant appreciation of dollar in recent years. Now, even with Donald Trump out there creating problems, even with trade wars, I can't see the dollar collapsing from these kind of levels, but probably maintaining it. Now, there's a particular opportunity, I think, in sterling over 1 to 2 years. We have to get past Brexit. But sterling, amongst the other majors, is significantly undervalued against what we would term fair value. So I would say 145, 150 on sterling is about the right level. And clearly there's a discount today because of the concerns about Brexit. But very few international investors are holding sterling and really want to jump back in once there's some clarity.